Hey guys, welcome back to the channel. Jumping in to give you an update for Micron as we start the day. And I would say it's not the start of the day that we were looking to see today. We saw a little bit of pre-market positivity last night after hours. We saw it this morning, that momentum shift and change. And then when the opening bell rang this morning, the stock dropped. So currently right now, when you take a look at Micron, you can see it on the board. It is down by over 3.5%, down by $15. Pushing towards that resistance level or that floor of 380. Will we break through the floor of 380? Below that, I think the next support level is probably down into the 350, 360 range. So let's keep our eye on the stock today. But there was two articles that came out this morning that I just wanted to share with you overall that I think gives us a little reason for why we're seeing what we're seeing with the stock. The first one was shared on investing.com, which is Micron Technology, or why is it down today is the question. The first line overall could be a primary reason. I'm going to dig more into this and put an update out tonight, but the primary catalyst, they say, is that Micron's decline for today is related to Google's release of TurboQuant, which claims to reduce memory requirements by 6x. But they also dive into the fact that what we saw in the earnings, you can see here, it's counterintuitive what we're seeing in the market right now. We have a paradoxical response to what we're seeing in the market, but investors are concerned about the CapEx. That is the biggest piece overall. We know they raised their CapEx to above $25 billion. And additionally, I think the other concern you can see here in the bottom is when you look at Micron's second half 2026 earnings, the upside was driven by price hikes in non-AI memory. It wasn't driven by AI demand. So while competition in HBM is intensifying as Samsung enters into NVIDIA's supply chain, this is increasing the risk for Micron's high expectations overall. And if we scroll down, you also saw that we saw a bit of sentiment. There was a few analytical houses that moved from buy to hold. This one in particular, in Summit Insights, downgraded to hold, was reflecting based on concerns that the upside may moderate, even if the fundamentals stay strong in the company. So this is what we talked about. The price today is not looking at the fundamentals today, but is looking at what will this company deliver in the future. There is concern that have we reached the peak overall, at least in this article. And finally, you can come down. The consensus takeaway for this particular analyst is that the combination of elevated CapEx, increasing HBM, high bandwidth competition from Samsung and SK Hynix, and the valuation concerns after a massive run-up have created a perfect storm for what we're seeing with the stock right now, what we saw come into the pre-market and what we saw happening right now. But I also want to jump over and just share another article. And this one is on Yahoo Finance and says, Micron just hit a ceiling, but here's the most likely path from here. And if you scroll down, there's a few things that this particular author points out that you can see here. Micron shares finally ran into a ceiling after the company has clocked in some spectacular quarterly earning results. Undoubtedly, it's the amazing quarterly earnings that have been the culprit, sparking a bit of reversal in this stock. We have seen this with NVIDIA now, Micron now, and others. When you put up amazing results, it's almost if you see the shares go the opposite direction. That people are concerned is how good can you get after that quarter? Can we continue to see better quarters on quarter results for the company? And so this author continues to say, whenever you raise a bar that high, it becomes difficult for the best positioned company on earth. It becomes difficult to continue to get those big rounds of applause from investors because they worry you may not be able to deliver again. He calls out the CapEx as the biggest concern. But he also makes a great point that this is a far cry away from the magnitude of money that the hyperscalers are sinking into CapEx. And it seems like but it does seem like any kind of spending triggers a perfect formula for a negative result right now in the market. I agree with this statement too, is that you can't blame investors for profit taking when you've seen a company and a stock have a parabolic return like we've seen with Micron with over 300% in a year. But he's going to make a case for why you should hang on to the stock and even buy into the slide right now. And that's my mindset as well overall. I've shared that on the channel. And what he mentions to say is while the latest downtrend may not be so quick to reverse, the stock now off 14% from its all-time high in the north of 460 a share. The potential triple top technical pattern could be in the works. From a bearish perspective, he claims that we could make a lot of sense to see this stock push down to the 295, 300 range as a potential entry point. If you were on the bear side, you were looking when to get in, that could be the range. But he also clearly says in the bullish camp, there's a case for buying Micron now if it dips, since it's dipped under 400, instead of trying to wait for it to go further down. I love that when he calls out here in this point that, yes, they've spent $25 billion in CapEx, but honestly, what are they supposed to do with the tens of billions of dollars that they have in cash on hand? And that he would be more concerned if they weren't aggressively building fabs for the next generation machinery, if they weren't trying to keep up with the competition. What would happen to Micron if they didn't spend the money that they need to spend to meet the demand in the marketplace right now? He overall mentions that he thinks Micron is misunderstood right now. Many of the bulls are in the same camp as this author. Barclays is actually looking for the stock to hit $675 a share. That's a 70% gain from where we are today, where we're trading right now. But in the end, he says, maybe it's a structural shift, as the firm believes, that's in the cards for Micron. I think the undersupply may be severe enough that the firm's latest CapEx might need to be a bit higher and that it's in the low range. So he's actually saying, hold the reins, because Micron may need to spend more money to meet the demand in the marketplace, not less. So if that $25 billion scared the market, what if they increase their CapEx just because they have to expand more of their fabs to meet the demand in the marketplace? Guys, that's the sentiment that we see right now in the market overall. It is definitely not the performance that I expected to see out of the gate this morning, but let's hope the sentiment changes. Let's hope the fundamentals win the day and investors come back in and see the opportunity to buy Micron at the price it is trading right now. I continue to believe in this company. I continue to hold. Let me know your thoughts below. Hope you guys have a great day. I'll see you tonight when I drop my second video.